everybody, Buffy the Rate Slayer here, and we are back with the second episode of the July Weekly Market Insight Series directly from the Capital Markets Trading Desk at SunWest Mortgage Company. Markets are riding a positive trend after key inflation data came out on Wednesday. According to reports, consumer prices rose 3% last month. This marks the slowest annual rate since March 2021 and is therefore considered as the most influential inflation report in providing insight on interest rates. This positive news gave a boost to the U.S. stocks. Even though these are positive signs of inflation by drawing closer to the Federal Reserve's inflation target, the report probably won't be enough to stop them from implementing another rate hike in their next meeting at the end of July. However, it does create doubts for the possibility of future rate hikes. The earnings season has started with major banks this week. However, Wall Street strategists aren't holding much hope that the earnings season will provide much of a boost to stocks. U.S. producer prices barely rose 0.1% last month from a year earlier, another sign of cooler inflation that will likely comfort Federal Reserve officials. This is the smallest advance since 2020. On a monthly basis, the PPI also increased 0.1% after falling in the prior month. U.S. applications for unemployment benefits fell last week, suggesting companies are holding on to workers despite a moderation in job gains. Initial claims for unemployment benefits dropped by 12,000 to 237,000 in the week ending July 8th. Continuing claims rose to 1.73 million in the week through July 1st. Consumer credit increased by $7.3 billion in May, following a downwardly revised $20.3 billion in April. The key takeaway from the report is that the pace of credit expansion in May was the slowest since November 2020. Mortgage applications were back up this week as purchases were up 2.84% and refinances were up 3.32% compared to last week. On Wednesday, the inflation rate moved to 3%, providing some fresh air into a hot summer of rate hikes. As inflation gets closer to the 2% target, economists expect that the Fed will ease its aggressive plan against inflation. However, few traders are still expecting one more rate hike from the Federal Reserve before stopping further hikes, as the inflation cools in line with Fed's inflation target. That's all for the week. Join me again next Friday to get updated with our news, and our trading desk will keep you informed with our pricing incentives. Have a great weekend, everybody. Buffy, out.